Okay, so let's get started. Good morning and good afternoon, wherever you are joining us from today. Welcome to today's session on how blended finance can play a critical as well as catalytic role in crowding in private capital towards climate mitigation and adaptation solutions for the most vulnerable communities. My name is Alicia Maitland. I'm a senior associate at Convergence, the global network for blended finance, and I will be your host today. I'll also be joined by my colleague Sneha Thalil in the second half, who will be moderating the panel. The workshop today has been organized by Pegasus Capital Advisors, a leading impact investing firm that has launched innovative blended finance vehicles, and one in particular that we will be discussing today, the Subnational Climate Fund. Our speakers today are going to help us understand both the demand as well as the supply of these types of deals, and share some learnings from working in this constantly evolving market. Just before we get started, I think it might be helpful for some of you in the room to have a brief overview of what we're really talking about when we're speaking about blended finance. Blended finance is the strategic use of public and/or philanthropic capital to really drive and increase private sector investment in sustainable development for emerging markets. And what it does is it essentially addresses two main barriers that we see that private investors face when considering investments in developing countries. One being risk, of course, and second being the poor returns for the risk that they undertake as compared to other investments. So the presence of the public and/or philanthropic capital within a transaction really helps to improve its risk-return ratio, making these investments a lot more attractive for private investors. Excuse me. So blended finance structures can take on a variety of forms, but we have essentially four sort of fundamental archetypes that we see: concessional debt or equity, risk insurance or guarantees, as well as design stage grants, and lastly, technical assistance facilities. So what's really unique about blended finance is that it allows different types of capital, public, private, and philanthropic, to really invest alongside each other while achieving their own sort of respective objectives, whether it be financial or social, or a mix of both. So when we look at achieving the UN SDGs by 2030, including combating climate change, which was why we're all here today, there needs to be some scaling up of this type of investment, and current official development flows as well as philanthropic commitments are simply not enough to reach these targets. And so what we're looking at with blended finance is being able to evolve the private sector and these types of investments on commercial terms, and really drive in that additional capital that's needed to scale up these initiatives. So that's just a brief summary of what we're talking about when we're discussing blended finance rather. And if you're interested in learning more, please do check out convergence.finance for more information. There are a lot of publicly available resources for you there. Just one last note before we get started with our speakers. Please do put the questions that you may have that come up during our presentations into the chat, and we will put them to our speakers in the panel session a bit later on. So kicking us off, I'd now like to introduce our first speaker, Terry Tamminen. He's the operating advisor for Pegasus Capital Advisors, to give us an overview of the Subnational Climate Fund. Terry, welcome.
Great, thank you so much. And I know I only have 4 minutes, so I'll speak fast and then answer any questions later. So I am an operating advisor for Pegasus Capital Advisors, which was founded in 1996. And for the last 20 plus years has been focused on sustainability investing, even before we were able to say those words to investors. We were thought perhaps a little bit odd when we said green or sustainable or impact, but now all of those are very common, and particularly with respect to climate finance and climate investing, because we have this great sense of urgency. We understand the planet is running out of time. We also understand that there have been a lot of improvements in electrification of transportation, in renewable energy deployment, in many other climate solutions at scale in the developed world. But if we don't also help the developing world to achieve the same things, and then the entire world to go farther and faster, we will lose the battle for climate change and for sustainability on the planet. So that's one of the reasons that Pegasus is proud to be a partner with the Green Climate Fund and others in the Subnational Climate Fund. And let me share my screen and explain a little bit about what that is. There we go. I hope everyone can see that. Go into full screen mode there and minimize that. Okay, hopefully everyone can see that. So the Subnational Climate Fund is called that, because we work mostly with subnational governments, cities, states, provinces. We certainly also do work with some national governments, especially in smaller countries. But this is dedicated to finance climate solutions at scale in 42 developing countries. And we're focused, as you can see in the upper left here, on mid-sized projects that we think are not well served otherwise. So things that are $1 to $5 million are often either philanthropic or there's small local finance mechanisms. Things over $100 million, really large scale solar or wind projects, for example, there's development finance available and sovereign finance available, but it's that $5 to $75 million equity ticket size that we think is underserved. So that's where we focus. The structure of our Subnational Climate Fund, as you heard mentioned in the opening remarks, is meant to overcome some of those barriers about sovereign risk and currency risk and the other challenges of working in these areas, and just the unfamiliarity in many cases with some of these countries that investors have. So as you can see on the lower left, the $750 million fund is anchored by a $150 million junior tranche from the UN Green Climate Fund, and they only seek a lower concessionary rate of return. So taken together, this reduces the risk and makes more marketable returns for senior investors, pension funds and development banks and so forth, which makes it more possible for us to raise these funds. We also have $28 million of technical assistance, so we can help do feasibility studies and capacity building with local governments. And Gold Standard is one of our partners, which you'll hear more about shortly. And it's really important for us to validate, measure, and report and verify the results of these projects in terms of climate and other SDGs. And so what are the things we invest in? This slide shows you sustainable energy solutions, which includes, of course, things you'd expect like solar and wind and energy efficiency, water and wastewater, urban solutions, and importantly, sustainable agriculture, because we certainly know that, that the world needs more food, but it needs to stop wasting the half of the food that does get wasted every year, and that we can sequester a lot of carbon in the soil. So I'm coming up on my time here, but we'll make these slides available to anyone who needs them, and happy to answer any further questions.
Thanks very much, Terry. I'm sure there's much more we can learn about this, and we had to do it in such a short time, but we're going to spend the rest of the session really digging into the details of this as well. I'd now like to invite Medina Croslovich, I hope I said that correctly, Senior Program Coordinator for Nature-Based Solutions Finance for International Union for Conservation of Nature, Iucn. Welcome, Medina.
Yes, thank you, Alicia, and hello to my fellow panelists, and sorry, and to the event audience as well. It's a pleasure and it's a privilege. Sorry about that. It's a pleasure and a privilege to be here with you today virtually from the comfort of my office. As Alicia has introduced me, my name is Medina Croslovich, and I am a Senior Program Coordinator for Nature-Based Solutions Finance with Iucn. So I will respond to Alicia's question by briefly reflecting on the role of nature in climate action and in finance, and also by building on some of the early experiences that we have with the Subnational Climate Fund. And starting to say that when observed through the lens of ecosystem services, nature is non-exchangeable asset to people and to our societies. Nature is providing benefits for economic, for social, for spiritual, and other types of human activities. And I think to illustrate, it's enough to mention just a few broad examples, such as food production, or nature being a source of renewable energy and materials, clean water, and similar. And instead of being a part of the climate change problem, which unfortunately still is the case because of the destruction and degradation of lands and oceans, it needs to be, and in many ways it currently is, part of the solution through carbon mitigation, through improving resilience, and also through offering opportunities for adaptation. So to say that through nature-based solutions, we have an opportunity to address several societal challenges, Just to illustrate, it has been assessed that nature-based solutions can provide clean and safe water for more than 1.4 billion people, while also saving money, so doing it in a cost-effective way. And that almost 40% of mitigation potential for achieving Paris goals can be obtained through nature-based solutions. Iucn as an institution has provided a definition, a broadly accepted definition of NBS, which actually means, and it takes into account actions to protect, to sustainably manage, and restore natural and modified ecosystems in order to be able to address societal challenges, while also providing benefits for human well-being and biodiversity. But even with this, its fundamental current and also potential future role, funding for nature, and more specifically for nature-based solutions, is limited. As most of us are well aware, and it was mentioned already at the beginning, it acutely depends on public and philanthropic funding, which is scarce and it's usually inefficient to address the current funding deficits for nature. So in that context, if private investment capital can become a significant, if it can become a significant source of funding for nature alongside the public funding, it has a chance to materially contribute to narrowing down this gap, and also has a chance to bring more action and innovation to solving climate change and other global crises. For example, solving biodiversity crisis and health crisis alongside climate. So in order to deliver on the volume of private investments that are needed to address the scale of these challenges, we need investment opportunities that can balance measurably conservation benefits with also social impacts, while also being able to deliver financial returns for investors. So in that context, Iucn has been actively tackling these barriers of private sector finance for nature-based solutions through catalytic initiatives and partnerships such as the Subnational Climate Fund, but also more broadly at various levels, including unlocking public finance from multilateral and bilateral sources, and blending them with private finance in order to provide opportunities to innovate with the new finance vehicles, as well as building capacity and providing technical assistance to strategic public and private partnerships. So our teams, together with our partners, we have been focusing on achieving strong environmental and social impact for climate investments, while also being able to integrate nature-based solutions into various sectors. And we already have had a chance to hear about the sectors that the Subnational Climate Fund is focused on. So looking into that and also more broadly. And also alongside that, we have been developing tools and metrics in order to be able to showcase credibly the progress and achievement of multiple benefits from nature-based solutions. I know that my time is almost up, so I will conclude by saying that there has been a lot of excitement lately about NBS, and particularly there's been a lot of interest from investors in nature-based solutions. However, there are still several challenges to scaling up, mostly because the market for nature-based solutions projects is still at a very early stage. It still needs significant support, especially through technical assistance, and that is able to work alongside private capital to mature the products and pipelines and be able to bring them to scale. So I usually use the example of renewable energy market from 15, 20 years ago to compare it to where NBS markets currently are. And this is the reason why SCF and as a partnership, we focus particularly on capacity building and pipeline development in order to be able to contribute to lessening this gap and providing better enabling environment. So I will stop here. Thanks, Alicia, over to you.
Thanks, Medina. I think it's true what you said about hearing a lot more about nature-based solutions more and more, and the interest level as well. So it's great to hear a little bit more in detail about how those can be investable opportunities. And I look forward to hearing a bit more later on in the panel as well. Now I'd like to invite Felicity Spores, Head of Sustainable Finance at Gold Standard. She's going to speak to us about the importance of measuring impact and as well as a new certification process for funds. Welcome, Felicity.
Thanks, Alicia, and hi to Medina and Terry from the team and everyone else, and hello to everybody in the audience. So some of you may be familiar with Gold Standard. We're a sustainable development standard that started off in carbon markets. We started in 1990, and have been working for the last, over 20 years, developing approaches for measuring, managing, and maximizing impact. So we're very interested in ensuring that people who claim they contribute a sustainable development outcome deliver on it. And although we're most known for our work in carbon markets and the voluntary carbon market sector, we also work with corporates and with funds. And a big part of our mission as an NGO is to ensure that we see genuine outcomes, that it's credible. And as we're working with SCF, we're developing the very first fund requirements, which means we're certifying at the level of the process for the fund, because what we've seen is that doing project by project is too slow. We all know we have a climate challenge, which is not only difficult and complex, but also urgent. So Gold Standard has developed fund requirements, which working with Terry and Pegasus and the team, and with GCF and with Iucn, we're trying to achieve several things. One is, at every point of the investment process, the management process, sustainable development outcomes are considered. So at go, no go, feasibility, operation, and exit, sustainable development outcomes are considered. And we're working closely with Iucn and the work that they're delivering on the nature-based solution standard to ensure that we integrate and we harmonize. So the outcome of our work should be a tool for all portfolio fund managers, which includes corporates have funds, governments have groups of funds, and also impact fund managers have funds, to start considering at every point of the decision-making process, am I delivering on my strategy? Am I delivering on sustainable development outcomes? And then how do I correct when I see something isn't going to plan? And we believe that that process will address one of the biggest challenges, which is there are no projects out there. That's what I always hear investors say. There's not enough development. There are no good projects. And the project developers say, we've got lots of projects. What are you talking about? And I think this is an interesting approach. If you look at process, what we see Terry and his team doing is actually educating the companies on the projects on the ground that aren't aware of how to develop a very robust development measurement process. And if you ask at the point of investment, you have more leverage to drive better outcomes. And so it's our belief at Gold Standard that this new fund requirement, which thanks very much to Pegasus and the opportunity provided by the Green Climate Fund in this Subnational Climate Fund blended finance vehicle, will allow us to sort of speedway. And we are the first standard of its kind. So we've built on the IFC requirements on OECD and the and UNEP portfolio fund manager standard. We're working with the impact management platform, and they are appreciative of this work. We're the first mover because we're a small NGO, we can move first. We might get it wrong and we'll appreciate your feedback. So look forward to questions. Thank you.
Thanks, Felicity. I think it's true, like you say, pipeline is always something that comes up over and over again as well. Standardization is always brought up as a barrier to deploying capital in these types of investments as well. So great to hear about that, and we'll hear about it a little bit more in a few moments. I'm now going to be joined by Keith Agoda. He's the CEO and co-founder of Producers Market. He will be walking us through a case study on AgriHaven, which is an innovative food systems model and an investment with that Pegasus Capital Advisors is currently considering within the Subnational Climate Fund. Welcome, Keith.
Hi, thank you. I think I need to be enabled my host so I can share my screen. That's okay.
We'll just ask the support team if they can help us with that.
Great. And meanwhile, I'll get started sharing. As mentioned, my name is Keith Agoda. I'm CEO of Producers Market, and we are a founding partner of the AgriHaven project in Jamaica. And first, it's great to be on here with folks from GCF, Pegasus, R20, Iucn, Systemic, Gold Standard. Our team has been learning so much from these organizations, and gives me a lot of hope for the future of finance and humanity being associated with such strong teams who are united to achieve really big visions on how to shift infrastructures and systems in these countries. And we're really focused on the topics of food security and climate change mitigation and adaptation with this project. And what we are doing is to bring together a multi-stakeholder approach to food systems transformation so that we can overcome great challenges around resilience. AgriHaven is a scalable model for food security by implementing a market-driven agriculture infrastructure built around an ecosystem of private and public sector partners. We've brought together leading agriculture and food system technology companies, including controlled environment agriculture and agroforestry systems, to implement a carbon neutral agriculture park model that leverages diversified businesses and efficiencies to bring together localized input production, on-site growing and production of various crops, and a post-harvest infrastructure for on-site and regional farmers to access profitable supply chains. We believe that if local farmers are able to train in agroforestry and organic production, this can be a major driver to solving food security and climate change related issues. We want to give access to inputs of farmers and then connect their outputs guaranteed at better prices in this facility, all through a digitized model of aggregation and carbon reporting that will be built in partnership with the gold standard framework. And what we've learned is that building an alliance of public, private, market, and finance partners is a really interesting model to bring about a regional and national level transformation. And it requires these stakeholders in order to accomplish a big vision of food security and resilience. So in Jamaica, we've received support of the Jamaican government and are working with the local and global experts in technology and other universities to scale these commercial agriculture activities and bringing together the technical assistance facilities, private equity, public debt, and other resources that can make this model both achievable and scalable to other regions. So quickly, what is really the AgriHaven? We've built two different concepts around it. One is a larger scale model aimed at food security and import replacement. And the second is a community-driven model aimed at developing small farmer networks and on-site training, input production, and processing. The Jamaica model falls mostly into the second category, but will also feature on-site production with greenhouses. Because we've partnered with all of these different technology providers and businesses, we're able to build modules in this AgriHaven that includes the digital extension services for training and aggregating small farmers, post-harvest processing and packing to guarantee markets and to bring the outputs into a format to achieve marketability in domestic and regional markets, as well as mentioned the input production of compost, biological fertilizers, biological pesticides, biochar, and other inputs that will be used on site as well as with other farmers, as well as a on-site training facility, an organic tree and nursery genetics collection so that we can bring to market climate resilient genetics. Again, a scaled agroforestry model in Jamaica will be coconut combined with ginger, turmeric, and then other productive crops. Having the distribution and logistics to market to serve the small farmers and community to be able to reach market more efficiently. A test site for sustainable aquaculture and shrimp production. Carbon neutral eggs is one module we've considered. And then of course, the greenhouse production to replace imports on key produce crops. This whole model is built around the carbon SDG impact reporting and trying to get a digital MRV, measure, report, and verify, so that we can allow small farmers to participate in this carbon reporting mechanism. Here's a list of some of the companies who are partners to this AgriHaven ecosystem. And it features some of the leading technology providers from countries like Holland and Israel, as well as the United States, to bring together a model that can really replace imports and bring scaled food resilience and food security to countries. This is just a quick mock-up of the project that we're developing. And finally, just wanted to share that it's been an amazing journey from an entrepreneur's perspective to see what can happen when you bring together diversified funders and sources to bring a project that's so critical to the needs of a country to reality. So it's been an honor thus far to work on this AgriHaven project, and thanks for being here with us today.
Thanks very much, Keith. I think it's really valuable to hear from you and sort of real life examples of sustainable and holistic agriculture. And I think what will be great later on is to hear from you that the experience you've had in working with this diversity of stakeholders and investors as well. I'm now going to be joined by Edith Kiss, who's the Chief Investment Officer at Revalue Nature, and she'll just join us to discuss private sector mobilization. Welcome, Edith.
Thanks a lot, Alicia. Good afternoon. Very pleasure to be here with this distinguished panel. And yeah, pleasure to discuss about these exciting topics. On my side, I have spent the last more than 15 years in the carbon markets and also around the last 9 years in the impact investing side around natural capital. So I'm also coming from that a bit more narrower segment of the nature-based solutions that Medina very well explained within the broader context, and recently joined from the investment side to the project development side, working on one of that bottlenecks. This was also mentioned by my fellow panelists around the bottlenecks around investable, bankable, high quality project supply. So in terms of the I guess, yeah, discussing broadly the blended finance, I fully agree. I think, again, it has been already said very well. Basically, it's a very, very interesting tool, and I think we welcome that. Just about 10 years ago, it wasn't still on the table, so we have seen a lot of good developments on the marketplace. Broadly speaking, I think we still have bottlenecks with it, so it's a great tool, a great instrument. The issues is still around the speed, how fast we can structure these blended instruments. Blending can be done also on a project level. It's probably most efficient on the fund level. It's very exciting to also see and hear about the impact side reporting from Felicity and I think that's great development as well. So I think yeah, a lot of good progress on the market. Where I think we need still to work on is how to speed that up so that these funds fundraising doesn't take so many years, because we have limited time and we need to deploy the capital also faster to the projects. Interesting to hear around this sweet spot of between 5 and 75 million. I can definitely confirm on the nature-based side that's already quite on the bigger side, and we do see a big gap actually below 5 million. But then it depends also on which segment, and also the exciting developments in the nature-based segment is around the carbon pricing. Broadly speaking, nature-based carbon has been a bit the stepchild if you look at Kyoto Protocol and what happened and has been left behind, and I think it's catching up now, and putting a price on carbon really helps to with that risk return profile we discussed. So that indeed I think we need to work more on that to make the case investable. And if you look at more around the agri side, sustainable agriculture, I think there's a lot of potential, for example, around new methodologies around soil carbon, and hopefully with those type of pricing correctly those environmental externalities, we can speed up and make the investment case even better. So I think, yeah, from our side, our perspective, that there is a lot of interesting developments. Blending also can happen with beyond the public capital, with, as was mentioned, corporates, corporate investors, private philanthropics. So I think that's definitely happening. And yeah, so I think I'll leave it there and happy to answer any questions. Thank you.
Thank you very much. I think this is the key missing piece that we're looking for, right? Is the private sector mobilization, and you're highlighting there the opportunities as well. It's just a matter of sort of figuring out how to accelerate this fundraising in time to achieve our goals of this climate crisis. So thank you very much. I'm now going to, we've had a word from all of our speakers. I'm now going to hand it over to my colleague, Sneha Thal, who will be moderating the panel discussion amongst everyone who's joining us today. So over to you, Sneha.
Thanks, Alicia. And thank you very much to all of our speakers for that quick encapsulation of the work they're doing with regard to the Subnational Climate Fund. For this panel, folks, please feel free to put your questions in the chat as Natalie has just shared, and we'll try and get as much material as we can. So a quick question to kick us off. all of you have touched on some of the challenges in the nature-based space and in the financing space, but just to encapsulate it in brief, Terry, if I can address this to you, what are some gaps in blended finance that you have observed? And if you could share your thoughts from the finance perspective.
Yeah, certainly. So I think the first thing is good quality deal flow. Of course, that's true in any investment category, whether it's venture or private equity, or every other investment firm faces this, where you look at 100 deals and you end up making only a few. Well, in the developed world, I think, or in the developing world, I think that's an even greater challenge, because it's harder to screen through those deals. And that's one of the reasons we're very proud of our partnership with the R20 Regions of Climate Action, which has been a great source of that deal flow for quite some time. Of course, our partnership with Iucn, that has boots on the ground as well. And in addition to managing the Technical Assistance Fund, which then allows us to validate some of the assumptions that come in with deal flow, that we can do feasibility studies and capacity building and so on, as I mentioned, but they also have sources of deals. And then, of course, Gold Standard, not only as a validator, but as a global institution. So I think it's really unique to have this partnership between private capital and nonprofits that are working for this mutual benefit. But I'd say the other sort of challenge is to go beyond the conventional. I mean, even in developing countries, we're seeing plenty of deals for large scale solar or wind projects. Those are really not that challenging anymore. So to really go beyond that, to deeply decarbonize societies, we need to have things like what you just saw, innovative solutions from things like Producers Market. We're looking at things like insect protein projects and waste conversion, not just turning waste into a fuel that ends up getting burned and putting the emissions back into the atmosphere, but actually converting those materials back into productive sources for new materials. So I think those are some of the opportunities and challenges.
Brilliant. And then on the other side, as Terry has just called out to both Medina and Felicity, what are the challenges you see on your side from the nature and nature-based solutions perspective, SDG perspective, deal flow with meeting Terry's challenges?
Perhaps I can start first with reflecting just a sort of a couple of points. Actually, I think we had a really good representation of the views on the challenges for investment in nature-based solutions. And I think, some of going around the deal size, the fact that usually the projects in this space are less, I would say, sort of less, they're still very early stage. And they usually have other, I would say, inherent problems in terms of, usually in terms which is relevant to land use in terms of potential social issues, in terms of, also reaching the scale and so forth. And we have been looking into that in different ways in terms of how that can be managed. And the obvious way is looking into the projects that that have a substantive nature-based solutions component. However, the interesting part and sort of for the Subnational Climate Fund is that through being able to have the technical assistance facility, we are able to look into the projects from other sectors as well, and looking into the ways how we can integrate nature-based solutions better. So it's for example, whether it's about infrastructure or whether it's about new greenfield developments, how we can make sure that we are using nature-based solutions to reduce the cost while increasing the impact, and then how we can measure that impact. And this is where our collaboration with the Gold Standard has been very helpful in that way, that we can look at it from a holistic perspective. So not just looking at the nature-based solutions, but looking at it from the SDG perspective as well.
Mm-hmm. Great. And Felicity, did you want to add?
Yeah, I think it's really interesting on the impact side. I mean, you mentioned the carbon value and the interest in carbon value as a driver for greater impact. And I think what we're concerned about at Gold Standard is we don't want to see carbon certificates being an excuse for not transitioning. So two things I think that we're learning in this space is working with Iucn. We're looking at how does identifying what's gold in design. So we go in with a TA and we look at a project and we say, how do we maximize the impact outcome, which is what Pegasus has said, like we're complying with Pegasus strategy. How do we help them maximize that also in the most effective, efficient way? Because it has to be profitable in order for it to be sustainable and attractive for someone to imitate. So I think the learning we're having is that at some point, sometimes it's a matter of choosing where we want to focus the effort on. I mean, there's an example with an eco tourism project where it's the mitigation story isn't so significant, but looking at it through an adaptation lens and through an NBS lens, it becomes much more impactful. And so making decisions about what to measure, how that aligns with the strategy and thinking it through is very powerful, I think, as a consortium. I think Terry already alluded to it. Many highly impactful projects don't need high investment. So this opportunity with this fund in particular is that it's hitting a middle term ticket, which is 5 to 75 US million. On the other side, that's still quite big for some very highly impactful, scalable, replicable activities. And I think we're interested in using this as an opening for aggregating as well. So, like rather than look at your one project, is there a company that can drive multiple projects worldwide? That is also interesting to this fund. So other things we've learned really as well is in this relationship, I think we can say that the public, the TA side and the private side, we've been learning each other's languages. And I think there is in finance a bit of a siloed approach, which anybody who's a project developer will know. First of all, you need catalytic investment, then you run to the grants who might provide you debt or some investment, then you have to find a private sector investor who will keep it going, then you have to write another theory of change for the second government investor because that grant finished, and you're constantly running with project concepts, theories of change, and trying to meet private sector quick turnaround needs. And this is difficult. And so although we're trying to address that as a team, I think as a bigger learning, I do think there is need to look at how to bring the silos in the financial world together around a business model. And we are currently exploring that at Gold Standard. But that's another conversation, I think.
Yeah, no, this question of how to break through the silos between public and private is also quite interesting. And I want to invite Edit to also comment on this. But one pattern I'm noticing with all of the consortium members on the call is the extent of, storytelling or education dissemination that all of you have to do in addition to your existing role. So Edit, if you could just comment on, breaking the silos and the amount of educating that you have to do in this nascent sector, that would be great.
Yeah, no, absolutely. Thanks. Yeah. I think again, this is, we're looking at very complex challenges. Obviously, climate is one, but also overlaps with, as we discussed, biodiversity and also mitigation, adaptation. So we need to work in partnerships, the public-private partnerships. So again, I think that's quite known now. If you look at the nature segment, which I'm more able to comment on, then it becomes even more complex. And now Medina alluded to it. So most of the projects are social projects, right? So you work in a very different context. And I totally also agree on that's kind of the challenges. We don't really have time to make all this matchmaking anymore. Obviously, Convergence has done a great job with the platform, and again, really encouraging to see the past few years the developments. But we just need to find a way to I think two things for fund managers to get the philanthropic or the catalytic capital junior tranches quicker, and then after that for the fund managers, once they have their fund, deploy it quicker, because we don't really have that time to lose. And I fully agree that what I think is exciting is again, on a nature-based space, we do see the private sector coming in. We do see a bit of course a boom around the tech angle. Obviously there are a lot of excitement around the MRV and digitization, and I heard that from Keith as well. I agree, and that might be that some of the new entrants are more interested, and I think that's great to see because it can speed up the capital flow. So yes, so there is hopefully more interest from private sector, a broader range of players, not just the typical offsetters or with the big footprint, but there is tech companies, VCs looking to enter the space. And I think one of the interesting point is that the private sector can also step into that kind of project development space, which we have seen actually back in 10 years ago on the CDM market that worked quite well, and help those local actors, NGOs who need to start, again, these NBS projects have to start from the ground, from the NGOs, from the local actors, but we need to find a way to effectively scale them up and replicate, cross-fertilize different continents, different countries, and then bring that to the investors quicker. So that's one of our mission from a spin-off from Systemic and working on Revalue Nature, for example, in the NBS space to do that. So really excited to, discussing this today and hopefully making that happen in the future together. Thank you.
Mm-hmm. Thanks, Edith. And that's a great segue to my question for Keith, as Edith was talking about this flourishing of tech innovation, agriculture innovation. So what have you seen, Keith, in this space, and what do you need from blended finance from an investee perspective to do this kind of action?
Great question. And what's been unique about this environment and working in this space in blended finance is that while profitability is a bottom line that's critical to success and sustainability, it's only relevant if there's a strong social and ecological impact involved as well. And this mentality of the blended finance that we've become exposed to creates a North Star for the project. Whereas traditional investors may look at true impact as a downside to profitability, this group sees it as one and the same. So it helps us as entrepreneurs, technology providers, to make sure that we're really aligned with our mission and we're aligned with the project initiatives. And this is a major gap that we found in equity impact investment and the driving of debt at decent interest rates in emerging markets around food security, is to have an alignment that's holistic. And to have, for example, a TA facility where we can study the biodiversity on site and developing an inventory there, or exploring these carbon digital MRV markets so that we can better understand how to have inclusion to small farmers in the region. These are areas that may not be available to invest in R&D and planning and research unless you have a truly aligned partner in this public-private kind of blended social good model. So it gives also a really strong commitment and signal to the governments, to groups like ICA, CARICOM, JAMPRO, these are our key stakeholders in the region and in Jamaica, who have come in and helped us and worked with us on trying to figure out how to implement this project, because they see that there is an engagement that is holistic, that has a true social and ecological benefit.
Mm-hmm. Thanks, Keith. Terry, when Keith mentions aligning stakeholders and working with different groups, what have you found is the best? We have a question from the audience. What's the best win-win situation to optimize and secure private-public funding? So how do you balance the participation? How do you convince them that yes, we do need a TA facility to be funded by you, or things like that?
Well, I'll tell you, that was another kind of surprising challenge that we discovered when we entered into this particular financing vehicle. When we talked to foundations, for example, about joining the Technical Assistance Fund, we find them saying, well, wait a minute, shouldn't the investors be paying for this? Why should philanthropy be doing it? And so, that's certainly true for things which benefit the final outcome, and where perhaps the technical assistance funding can be reimbursed to the fund, so it can be used over and over again. But there's a lot of things, capacity building with the local communities, for example, the local authorities and other stakeholders, especially working with the affected communities in a given area. If you're putting a project in, certainly want to make sure that local communities are consulted with every one of these projects. So those are things which a tiny amount of philanthropic money can go a very long way in unlocking a lot of value in these projects. So that kind of gets back to your earlier question about education. So this webinar, for example, I hope there are philanthropists listening and understanding that this is not just a nonprofit thing trying to help a for-profit investor, and that the for-profit investor is putting in plenty of money of its own as well in these circumstances. But the challenge is to get people to talk about this and see good examples so that they feel comfortable about participating.
Felicity, I see your hand up.
Yeah, I just want to add to that because it's a really important point. And I think the point as well is that by unpacking and understanding the capacity building that goes to creating the enabling environment that makes it possible for profit to be made, there's a lot of TA work that needs to be done. You know, NBS isn't always presented. The work of Iucn is then to look at that project and design it. It wasn't designed as NBS. So this TA element is really, it works with and supports, but it also creates a fertile ground. It leaves behind it a fertile ground for replication and scale up. So I think there is, you know, like this is still, it's still not new to all of us on this panel, and convergence least of all, but blended finance is still something people are not quite familiar with. It doesn't quite fit all the boxes. What do you mean you're working with private already? Why don't you get the money then? And it's like, because we're funding the enabling environment and the design of that they otherwise they'll just move on by. So it's trying to draw down the money to where there are higher risk or where the projects aren't yet being presented in a bankable way. And so just to emphasize that point that Terry made, I think it's very important and often gets lost in translation. Thanks.
Great, thank you. And then, you know, continuing, you actually had an audience question, Felicity, regarding aggregation, but I believe you've touched on this a bit. So I'd like to throw it to Medina about, you know, the structure of the Subnational Climate Fund, on how it aggregates businesses and projects in a funding facility. Could you just speak to that and how you expect it to both, you know, achieve scale, but also achieve impact?
Well, thank you, Sneha. I think that's a very good question. And I would say that partially the fund structure, you know, answers that question as well, where we see the opportunity. And we talked about these gaps in terms of what the investors want in terms of the size and the scale of the investment, especially larger institutional investors that are the development banks and similar. They're looking at that larger ticket size, which we are in many cases that are not able to sort of, you know, from the project development size, that scale has not been reached yet. So the fund structure, the impact fund structure, there are many other structures as well, but I think this one is specifically very well, you know, able to deal with the issue of scale, like getting the funding from the investors, you know, being able to crowd it in at the fund level, and being able to crowd it in, as we mentioned several times, public and private finance, and then being able to work with the project developers, being able to work with them on the ground to make sure that the financing is flowing through, but also that, you know, we're able to work with the project developers on the impact side as well, you know, through the instruments that we have already talked about in terms of capacity building, direct technical assistance, and similar. So in that context, I think that, you know, SCF, you know, it has a lot of, you know, good examples. And I think lessons learned that we're going to be able to share with the wider community. So not just within our partnership, but, you know, for the market in terms of what we can learn from those processes in the future. So maybe I'll stop there, but I would say the fund structure is the way to go.
Mm-hmm. And then from the investor perspective, or the private capital perspective, Edit, if you could comment on the maybe current, you know, opportunities and barriers for making these type of large investments from the private sector, and what do you do when, let's say, I've heard the phrase capital is lying around in billion-dollar tranches, but the ground actually needs much smaller ticket sizes. So can you just speak to that flow through and that decision-making perspective from the private side?
Yeah, no, that's right. So there are a lot of billions that are trying to reach the market, to reach the ground. I think it's still, we haven't seen the translation of all those commitments into real investments, because then the fund managers would be much more busier structuring the fund. So I think there is still that lag. And then I think, again, in the nature-based space, the challenge is compared to infrastructure projects where you can quickly just, you know, like replicate a solar farm or wind farm. It's not as easy to scale. I think there is a lot of interest and excitement around jurisdictional approaches. So I think that's one of the ways to go. Certainly from our perspective around conservation and you know, also the broader landscape approaches, the jurisdictional approaches with Vera's new standard, and obviously there are other standards like the arteries, but that's something that we need to find a way to reach. How to do that, it's still challenging, and coming from the investor side, I still believe that you need to start still investing on the ground in investable projects and then reach that scale. So how you do it in a modular way, probably that's the best way for investors and again, I think we need to be patient and understand that these things take time, and rather do it slowly, step by step, reaching that scale than get it wrong. Coming back to the capacity building of the local actors, of the governments as well, all the consultations that needed. So I think there is a pathway for that. So I think hopefully we'll work through that channel. I think we have the challenge to do that in the next 10 years. And obviously beyond that, and on a longer horizon, there is also the other bigger picture restoration and other type of investments that need to go to scale. And then the infrastructure and technological solutions that are a bit different in nature.
I think we're getting cut off shortly. If you could just share this last slide, Sneha, I think we're overrunning a little bit. Just please have a look here. To all the participants today, thank you so much. And this excellent panel has been really enlightening, informative. These are all the contact details for everyone who's joined us today. So please do get in touch if you're interested to learn more. And I really hope you enjoy the rest of the Innovate for Climate conference and have a wonderful rest of your day. Thank you to everyone.
Thank you.
Thanks a lot.
Thank you.
Bye, everyone.